Reserve Bank Board is likely to move to a tightening bias when it meets on interest rates tomorrow. New car sales surge and it's hybrids, not EVs, that are selling fastest. And one of Australia's largest company wipeouts ever on the ASX comes a step closer. Welcome to Fear and Greed, daily business news for people who make their own decisions. It's Monday, the 6th of May, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you have an interview coming up today with Carlos Cacho, who is the banking analyst at Jarden Australia.
Yeah, I sure do. We had National Australia Bank release its results late last week. We have Westpac and ANZ this week. We talked to Carlos about what National Australia Bank said, what it means for profit margins, things like that, what it means for ANZ, Westpac, just how that sector is travelling generally. Now, of course, four of the top 8 companies, I think it is, four of the top 8 companies, four of the top 7 companies on the ASX are the big 4 banks. We all hold them in our super funds. So everyone should be interested in a chat with Carlos about the banks.
Yeah, absolutely. It is a great one for investors. So stick around for that. It's coming up after the show. The main story, though, this morning, Sean, the Reserve Bank Board meets tomorrow ahead of the federal budget next week. And while most economists don't think there'll be any change in the benchmark interest rate, the central bank may be more open to lifting interest rates later in the year.
At the moment, the Reserve Bank Board has a neutral bias on interest rates, but after recent high readings on inflation, that may well shift to a tightening bias. Michael, the central bank isn't against a bit of jawboning, one of those great words, jawboning, basically using its voice and influence to pressure the economy to move in different ways without actually doing anything. The scare of saying, once again, it's got a tightening bias might be enough just to keep inflation in check at the margins. That's kind of the idea behind it. Certainly inflation is higher than where the bank wants it, but Martin Place also knows that households are hurting big time. Retail sales and household spending data, along with commentary from both Woolies and Coles last week, really highlight just how tough it is for many people at the moment.
What about the budget next week, Sean? I mean, obviously there's a lot of money involved in that, a lot of spending commitments. Is it likely to be inflationary?
Federal Treasurer Jim Chalmers has continually said it won't be. And if that's the case, then it has to take more out of the economy than it puts back in, or at least make that even. So spending for cost of living relief needs to be offset in other areas. Now, the budget is likely to be a combination of subsidies, tax breaks, cheap loans, relaxed foreign investment rules. The government has talked up cost of living measures, but I wouldn't be surprised if there's not too many. I think the government will talk a lot about these rejigged stage 3 tax cuts. Any taxpayer out there will get a boost from that. So there's that. There's also HECS debt relief. We'll talk about that in a moment. Interesting on that one is they're cancelling debt rather than actually putting money into people's pocket. So I think it's those sorts of things that they'll do more of. Anyway, the government is determined to say it won't be inflationary. We'll actually find out in a week's time or 8 days' time, Michael.
And Sean, I need to give a very quick mention to Fear and Greed, The Week Ahead, which is a weekly podcast that you record with essentially Fear and Greed's resident economist, Stephen Koukoulas. And you talk a lot about inflation. You talk a lot about, in today's episode, it comes out every Monday, you talk a lot about what the Reserve Bank Board is going to do tomorrow. But I reckon it is the best episode of The Week Ahead that I have ever heard, and I've listened to a lot now over the last few years, but because I just came out of it with such a really good understanding of inflation and the pressures here and what the Reserve Bank is considering. It was a really interesting chat.
Yes, so Stephen did a great job in distinguishing between why households are finding it so hard, why that, if they're not spending as much, why aren't prices the pace of price increases, why isn't that slowing more than what it's actually doing if households aren't spending as much? And that's what he explains. And that really is the nub of the challenge facing the Reserve Bank at the moment.
Yeah, so look, if you don't normally listen to The Week Ahead, make today the day that you do it, because it is the best kind of 101 on all of that. And you and Stephen do a terrific job of explaining it. I'm not going to mention it again. I'm not going to keep on going on about how good it is, but definitely check this one out. It is in the Fear and Greed playlist. Local markets, how did things finish up on Friday?
The S&P ASX 200 closed up 0.6%, 7,629 points, led higher by some of the interest rate sensitive sectors, consumer discretionary, real estate, technology. Wasn't a huge amount going on. Wesfarmers and Goodman Group were among the best performers. Both Westpac and ANZ ended higher ahead of their half-year results this week. Aristocrat Leisure had a good day, while among the tech leaders, both REA and WiseTech Global closed up sharply. The laggards, QBE, Transurban, Telstra was down again. One stock that did find a friend on Friday was Star Entertainment. It finished 7% higher, coming off all-time lows earlier last week. What was interesting there, there were many reports over the weekend that debt holders in Star, so people that hold slips of paper, IOUs from Star Entertainment, well, there are suggestions that some people are trying to on-sell those, not real comfortable with whether or not Star Entertainment will be able to pay those debts back. That probably will weigh on the share price today, you would think. For the full 5 days last week, the benchmark was up just over 0.5%.
All right, checking international markets now. Thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au. Much happening on Wall Street, Sean?
It was actually a strong weekend on Wall Street after a report showed job growth rose only modestly in April and wage growth was muted. Investors took all that to mean that persistently high interest rates are working in slowing the world's biggest economy. That pushed Wall Street higher. For the week, it actually closed up about 0.5%. Now, it's earnings season over there. About 80% of companies have now reported March quarter earnings, and 79% have beaten expectations. It sounds like a huge amount, but in the US, you kind of have to beat expectations, otherwise you get sold off. So the average is 76% beating expectations, 79%. It's actually pretty good.
Wow, that's 70. So 76% is normal.
Yeah.
Wow. Is that a lot higher than Australia?
Yeah, I think it is definitely higher than Australia. I don't have the exact numbers to hand, but certainly the US, Wall Street, you are expected to beat expectations. So just before we leave international markets, in terms of the numbers, Brent crude fell again over the weekend. Gold's trading around $2,300 an ounce. It's down a bit. And the Aussie dollar is fetching just over 66 US cents.
Sean, we've got a fair bit to get through. It's a big start to the week. We'll be back in a moment with the rest of the day's business news. Sean, 3 million former students will have their HECS debts reduced by an average of $1,200 as part of the federal government's cost of living package in next week's budget.
Education Minister Jason Clare said people with higher education loan program accounts, HECS, which is actually nowadays called HELP, but we people who went through the HECS period, we still call it HECS. Anyway, HECS or HELP, whatever you want. You're going to have part of your debt forgiven if you've got it. A graduate with a debt of $26,500, which is about average, will have $1,200 wiped off their account. In total, about $3 billion of debt will be repaid. No, not repaid, wiped off. That's what it is. There's nearly $50 billion in HECS debt outstanding. Now, the government will also change how HECS debt is calculated. While it doesn't incur interest, it does rise on the 1st of June each year in line with inflation. Now it will rise in line with the lesser of either inflation, as measured by the Consumer Price Index, or the Wage Price Index. It's going to be backdated 12 months as well. So on June 1 last year, everyone with a HECS debt had a 7.1% increase because that's what the CPI was. Well, under these new rules, which are backdated, that increase will actually be just 3.2%. And rather than rising 4.7% in a couple of weeks' time, it'll rise by just 4%. Anyway, it's all part of the government trying to, we mentioned this in the main story, the cost of living issue. What I do like about these sorts of policies, it isn't giving people money in their pocket, which they will go out and spend and potentially is inflationary. It's actually making them feel wealthier by reducing their debt.
And Sean, we did a video on this on the Fear and Greed TikTok yesterday. So follow us on TikTok, Fear and Greed Podcast. We're also on Instagram as well, Fear and Greed Podcast. And really, this is one of those topics that it really engages people. There is so much debate and so much discussion about it, particularly in kind of that age group, because this is something that last year, when that 7.1% increase came through based on the indexation according to inflation, it really did hurt.
Yeah, it sure did. And I mean, just that engagement we're getting on TikTok and Instagram shows how important this issue is to so many people out there.
Yeah, absolutely right. Now, Macquarie Group's annual net profit fell 32% to $3.5 billion, lower than expected, as fewer asset sales and lower commodity prices hit the bottom line.
Australia's ninth largest company also cut its dividend, with boss Shamara Wickramanayake saying while the business was resilient over the year, ongoing economic uncertainty and subdued market conditions had hurt. The fall in earnings came from the Commodities and Global Markets division and the asset management arm. The commodities fall reflects prices. The asset management arm suffered from lower realizations in green investments and higher spending in green energy portfolio companies, which I think means ESG investing just isn't doing quite so well. The banking and financial services business, along with the capital markets operations, did do better. Ms. Wickramanayake said that the bank remained well positioned in the medium term, but she's taking a cautious stance on the outlook, given the current market conditions where interest rates are high and inflation is only subsiding slowly. Macquarie's share price underperformed on Friday. It closed down 2%.
Sean, when Macquarie's results and annual report come out, it's always good to check in on how much money people make. It used to be known as the millionaire's factory. Is it still the case?
Probably. Well, they get paid well. But yeah. I've got to say, I suspect Macquarie is a very good employer. I've never worked for them, but I suspect they're a very good employer because many people stay there for a long time. And so it just seems to me if you have people happy to work there, it's got to be more than money.
That's a good point.
I think so.
No, it absolutely is a good point. I mean, money is only going to keep people engaged and keep people sticking around for so long. Yeah. Culture and various other things, and ping pong tables are also important.
Very important. Now, when it comes to the really well paid, though, Macquarie is one of the best. Nick O'Kane, remember that name? He's a former head of commodities. Mm-hmm. He made $57 million in the last Macquarie financial year. This year, he made $1 million. Oof, ouch. It's actually, it's not as dramatic as it sounds. So it was on the back of much poorer performance from the global commodities business. He also left the business and he's not eligible for profit share bonuses. So there's more to it. But still, hey, hum, I've got 58 million this year and unfortunately we're down to 1 mil this year.
Well, he's still got paid $1 million. He's not even there anymore.
He was, though. He was. Ms. Wickramanayake is back to being the best paid among the Macquarie brethren. She made $25.2 million for the Macquarie financial year. It was actually down about 20% on the previous year because her remuneration is tied to profits. Profits fell, therefore her remuneration fell.
Now, Sean, the surge in new car sales shows few signs of abating, with the number of vehicles sold in Australia hitting a record for the month of April.
Demand is strong and the global car manufacturing backlog is freeing up, meaning vehicles can be delivered. Notably, though, Tesla sales in Australia fell during the month. In total, it was just over 2,000 Teslas were delivered, making it the number 10 ranked brand with a market share of just 2.1%. That's quite a fall. The Federal Chamber of Automotive Industries announced 97,202 vehicles were delivered in April, up 18.3% from a year earlier. For the first 4 months of calendar 2024, sales have reached an all-time high on a year-to-date basis of more than 400,000 vehicles. The figures show that buyers are preferring hybrid vehicles, though, to full electric vehicles. Hybrids and plug-in hybrids now make up more than 18% of new vehicle sales in April. It was about 7.5% a year ago. So that's the area where people are flocking to buy cars. The Toyota RAV4 was the best seller. Toyota RAV4 certainly comes as a hybrid, so I dare say a lot of those were the hybrid versions, followed by the Ford Ranger, Toyota Hilux and Ford Everest. All of those are actually internal combustion engines.
Sean, we talked a lot last week about Bonza, the airline, and the administrator of the collapsed airline. It says that it was issued default notices before its aircraft leases were terminated last week, and the majority of the carrier's staff have been let go.
Yeah, so Hall Chadwick said Bonza was issued event of default notices on April 17, that's a few weeks ago, yet its directors have advised the action taken by the lessors was not foreshadowed or expected, according to a report in the AFR. There just seems to be a timing issue there. Bonza continued to sell discounted airfares in the period between April 17 and its collapse into administration on Tuesday last week, despite not being able to pay its leases. That's what the administrators Hall Chadwick are worried about. A spokesperson for the Transport Minister, Catherine King, who said she had spoken with Bonza about its position a week before its collapse into voluntary administration, said there could be serious repercussions if directors are found to have breached their duties. Bonza's administrator on Thursday said there is insufficient cash flow and funding to recommence full operations, and as such, it will have to stand down the majority of Bonza's employees pending the outcomes of talks with AIP Capital. Now, AIP Capital is the lesser to both Bonza and its sister airline, Flair, in Canada. The administrators have extended the grounding until tomorrow morning, saying it's continuing to focus its efforts on securing aircraft to keep Bonza flying.
Shareholders in lithium explorer AVZ Minerals face one of the biggest wealth wipeouts in share market history. I mentioned this at the top of the show after management said it will delist from the ASX on May 13 as it battles for control of the world's largest hard rock lithium deposit in Africa.
Yes, this has been an amazing story for those that have followed it. Anyone who hasn't followed it, you're about to hear about it. That's still amazing. The Perth-based lithium explorer has more than 21,000 shareholders. They've got paper wealth of $2.8 billion tied up in the shares that last traded on the ASX in May 2022. AVZ Minerals is in a dispute over ownership rights to potentially the world's largest lithium deposit, according to a report in the Financial Review. Now, the board last week said it will not seek to be reinstated to the ASX. It blamed the prospective delisting on the Democratic Republic of Congo government's failure to comply with court orders and multiple other legal battles it has with Chinese and Congolese mining rivals for control of the Monono tenement in Congo Southwest. AVZ's market valuation hit $4.6 billion in April 2022 on hopes it would secure a license to mine the Monono deposit. That deposit is estimated to be twice the size of Australia's richest lithium mine. So we are talking a huge deposit. That was April 2022. The next month, the explorer entered into a trading halt after it disclosed to investors that it faced a legal dispute with Chinese and Congolese rivals over ownership rights to that deposit. It is possible that there is actually no value left in the company. It's got about $4.2 million in cash, but it's got legal disputes in Western Australia Supreme Court, in Sydney, Paris, Washington, London, Hong Kong, and the Congo. That'll use up that cash very, very quickly. If that's the case, it has gone, well, it was $2.8 billion, worth $2.8 billion when it stopped trading. 4 weeks prior to that, it was $4.6 billion. Now, I think HECS is probably the biggest destruction of equity in the ASX's history, and that was about $3.5 billion. So this is kind of, in a race to actually be the biggest destruction of shareholder wealth ever from one company.
Not a record I think anyone would particularly want to hold.
No, it's fascinating. I probably should explain that. The biggest destruction of shareholder wealth, share prices drop, so therefore you can probably argue that's even bigger. So BHP falls a lot or something like that. But in terms of a company not giving any return to shareholders, I think this could take the top prize.
Well, it is quite an extraordinary story. All right, turning to international news now. French President Emmanuel Macron wants to reset economic ties with China ahead of Xi Jinping's visit to France.
The president says Europe wants more reciprocity in its economic ties with China in order to better ensure its economic security. Mr. Xi was due to arrive in France overnight, the first stop of a 5-day tour in Europe, according to Bloomberg. The visit comes as ties reach their most fraught point in decades between Europe and China, amid a series of probes by the European Union into excessive subsidies and accusations of spying and state-sponsored cyber attacks from China. Do you reckon Xi Jinping, goes on the Seine for a boat trip, has dinner on the Seine?
Up the Eiffel Tower, yeah. Standing in the lift with a whole bunch of other tourists.
Glass of champagne at the top, all that stuff, maybe.
Take a couple of selfies. Yeah. Pop them on Instagram. I'm sure he does.
I must start following Xi Jinping on Instagram to see. Well, it would be wouldn't be Instagram actually. It'd be TikTok maybe.
That's a very, very good point. Let's see if he's on there. Now, how about this one? The Berkshire Hathaway annual general meeting took place over the weekend, and most of the interest was actually around who Warren Buffett thinks should succeed him.
It's kind of a delicate question, isn't it, really?
It's also probably quite a timely one, considering Warren Buffett is not a young man.
No, he's not, Michael. He's 93. So I suppose it is fair that shareholders are interested in what's going on. Yeah, he began investing when he was 16. That was 1946. It's pretty cool, isn't it?
That is amazing, and that allows you to like put in place a very, very, very long career. It's like people who get married at kind of 19 and then they both live till they're 98 or something. And then all of a sudden they're celebrating their 80th wedding anniversary. The earlier you start, the longer the record's going to be. And he's happened to have, is not just the longest investor of all time, he's the most successful investor of all time as well.
Yeah. Maybe that's what it is. So experience matters. What's that, 77 years of investing? Wow. Anyway, he's anointed Berkshire CEO Greg Abel to pretty much take over everything, though he did also warn that when the time eventually came, he might just come back and haunt Mr. Abel if he does anything different.
What a threat. Can you imagine any other AGM where the boss threatens to come back and haunt you if you don't do the right thing after he's gone?
Amazing. We also found out at the meeting that Berkshire's cash pile is now $189 billion US. And it's got about $336 billion US invested in equities. When asked why he isn't deploying more of the cash, Mr. Buffett said, "I don't think anybody sitting at this table has any idea," so that table being the board table, "I don't think anybody sitting at this table has any idea of how to use it effectively," which is pretty blunt. He also added, mind you, that getting 5.4% from government bonds is a pretty good return. He's right on that. Of course, Mr. Buffett's long-time business partner, Charlie Munger, died last November. He was 99 when he passed on, Mr. Munger. Anyway, it was the first annual general meeting without Mr. Munger being there.
Obviously, those two worked together so closely for so long. It would have felt like something wasn't quite right, really.
Oh, I think so. Actually, they did say it was quite. So Mr. Abel, Greg Abel, he took over a lot of the running of the meeting, which it's very unusual for Warren Buffett not to do that. And I only saw pictures of it, and he was in he looked okay, but he's obviously using a walking stick, and he's 93. It's a pretty good inning so far.
All right, one more, Sean. Apple shares rose 6% after the company posted stronger than expected sales in the March quarter and predicted a return to growth.
Yeah, so Apple's share price has been a not so magnificent part of the big 7 tech stocks that have driven the market over the past year. It's still down even after the jump over the weekend. It is still down this year. Revenue from Apple last quarter was down, but not by as much as forecast. Apple has posted sales declines in 5 of the past 6 quarters, hurt by a sluggish smartphone market and headwinds in China. Profit in the quarter was also a bit better than projections, and the company announced, this is the bit I like, a $110 billion share buyback. $110 billion. That's like the whole Commonwealth Bank.
In a share buyback.
Yeah.
And you explained, of course, last week what a share buyback is, the purpose of it. And so clearly they've got some cash.
They got some cash. Yeah, sure do.
All right. Up next is the Fear and Greed Daily interview. You're speaking today with Carlos Cacho, banking analyst at Jarden Australia.
I am all about the bank results. We had National Australia Bank last week, Westpac and ANZ. Over the next few days, we asked Carlos for his take on how NAB went and what he thinks the other two will do.
It's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And of course, don't forget to check out the week ahead as well, which comes up after that with Stephen Koukoulas. A very, very good chat today. Thank you very much, Sean.
Thank you, Michael.
It's Monday, the 6th of May, 2024. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, X, TikTok, and Facebook. Head along to fearandgreed.com.au where you can sign up for our weekly newsletter. It comes out every Wednesday, so you've got a couple of days, but do it today so don't forget. I'm Michael Thompson, and that was Fear and Greed. Have a great day.